As the year comes to an end, we've been looking at some of the biggest movers on the TSX, and one of the biggest losers has been Constellation Software, down about 25%. Our guest has brought down the fair value estimate on the stock, but thinks it's undervalued. Let's get more from Alex Medow, equity analyst at Morningstar. Alex, thanks very much for joining us. We keep hearing, oh, well, people are concerned about the impact of AI on Constellation's business. Do you think that's the main reason for the malaise in the stock?
Good morning, Andrew. Thank you so much for having me. I think there's really three things kind of driving the performance this year. I would say number one, of course, is Mark Leonard's unexpected retirement, the founder and president of Constellation. I think number two, as you mentioned, is the uncertainty surrounding AI and the impact it will have on the business. And number three is the lower capital deployments, as M&A activity hasn't met consensus expectations. And so those are kind of the three major factors impacting the share price performance.
And you have brought down your valuation estimate on the stock. Why is that?
Well, look, we had capital deployment closer to $2 billion this year. The biggest driver for the share price and growth going forward is the amount of revenue that can come from M&A activity. We do not expect that they will reach that target. We now have it closer to 1.2 to 1.3 billion, and so we think inorganic revenue growth going forward will be slightly slower than we previously expected.
And sorry, they've been slower to deploy capital, you mean?
Yes, yeah. So the number of companies they've acquired in terms of the size has been below our expectations.
Why is that? Just people getting greedy? They won't sell to them?
I think there are a few reasons. I don't think it's necessarily greed. I think although the markets have done well this year, software has not performed well, right? And business owners want to sell when they can get good valuations, and I think valuations have compressed. And I think number two is they're looking for companies in new verticals, new geographies, and it takes time to build out M&A teams in new areas. And so, obviously, I think it'll just take a little bit longer to achieve this.
Some numbers there. Let's put up the stock price again. You had your fair value estimate at just north of 5,230 Canadian, or 5,230. You brought it down to 4,170. So it still is trading below what you think investors should be paying.
Absolutely, and I think, look, the long-term value of the company certainly isn't being appreciated by the market presently. It's just we think it'll take longer for them to achieve some of the growth that we had originally expected.
The company, it is fascinating, isn't it? It's done some spin-offs. It's famous for operating on a very decentralized basis. The spin-offs of companies into new publicly traded entities, is that a good strategy?
Of course. I think it's actually a competitive advantage for them. It allows them to achieve a lower cost of capital when acquiring larger businesses. And it's very interesting and very unique. Not many others do this.
It kind of reminds me of Magna International, our Canadian auto parts giant, used to do that because it gave managers of those units incentives, well, stock options and stuff, although they pulled back from that. Is this business of specialized software services, is it changing?
I wouldn't say so. Look, I think back to your first question, AI is certainly impacting everyone's lives. It's going to impact software broadly, but we think that when the question comes back to who's in the best position to harness the power of AI. Is it the end customer, or is it the enterprise that's addressing the particular workflows, right? And we think, as of now, AI should actually benefit these companies, benefit vertical market software businesses, as they know the customer better than the customer in many cases knows themselves. And so we think they can use this to accelerate products and create more value for the customer. And so, of course, there's a lot of change going on in a lot of these companies. Software is going to continue to change, but we think Constellation and broadly vertical market software is actually poised to benefit.
And I'm just trying to think, if we put up a 10-year chart for Constellation, CSU, as you know, for years it was just a reliable stock. We would frequently get guests on BNN Bloomberg saying, oh, it's a stock you can probably hold for many years. But finally, it's let people down.
Yeah, I mean, look, when it rains, it pours. This has been a tough year. As I mentioned, their founder and president, Mark Leonard, retired, which is a major, I mean, that's a major impact on the company. Like I said, everyone's wondering about AI and how this will impact the future of software and more broadly just business in general. And then, like I said, too, capital deployments have been a little lower than I think we originally expected, which is impacting near-term growth. And so, look, this year has been tough, but we really do expect Constellation to bounce back in the next coming years.
Thanks very much, Alex. Really appreciate it.
Thank you so much for having me.
Alex Medow, equity analyst at Morningstar.